is 3:40. Sorry for the late start. These webinars keep getting scheduled later and later, and it's pushing into that final hour session, so I apologize for that. But we are here to go live for the last 20 minutes of the day, and we'll grind a little bit further as far as analysis goes. So, Friday close, Moody's announced a U.S. downgrade. Last time we saw the S&P downgrade, the U.S. was back in 2011. Basically, it was a sovereign debt downgrade. And, what does it mean right now? Well, the market clearly has a little bit of a shakeout today. We, had a close. I'm looking at SPX prices from Friday. We were up around 59.58 on Friday's close. Market gap down about 1% today and has rallied all the way back up to finish pretty much flat from where we opened on Friday. So I'm still, P&L positive on the day, which is fine. The market, interestingly enough, it's just a tiny little sliver here, but based on the open, so the close from Friday to the open today, and you draw a straight line over from where we are right now, it is slightly red on the day. Now you can see here 0.12 on the SPX. We are 0.16 to the downside on the NDX. Qs are down 0.14, SPY's down 0.06. The Dow, basically we had just an open lower and the market fought back. I'm riding this trade out for the next 20 minutes. I'm looking to see if we can get back down to 59.40. I might let this one cash settle. I don't really want to, but I've already taken on all the risk for the day anyway. So this trade right now is down about $500. This trade is down about $350. If we have a push down to 59.40, that call and that call right here, 59.40 call and 59.45 call, I need this thing to hopefully push down 5 points by the close today. If it does, then I'll keep the profits. I've got 250 and 210 respectively. I did put in a dollar debit on both. I don't know if that's going to come like in the next 18 minutes or if we just cash settle and I still take losses on the day. If that's the case, it is what it is. But I gave it a chance. I was still down about $1,000 when the market was up here, around 12:50, 1 o'clock anyway. So I thought, well, at this point, I'm going to hedge this thing, which I did. And, I hedged it to the upside around 59.95. That obviously doesn't look like it's going to be a winner, but I only wasted about 45 cents on that. So that was a 45-cent debit that could have paid me about $1,900. But it's not going to work out. So now it's back to the daily profit play. Do we get this thing back down below 59.40? If that is the case, then we can turn these both into a winner. So I have my 250 and 210 both setting at a $1 debit. So if I win the day, here's what it looks like. I would have a 250 credit if it closes for a $1 debit. I have a 210 credit if it closes for a $1 debit. So that gives me a bonus. That's $140 per contract. That one is $110 per contract. And then my max risk is about $90. So 45-cent debit. And it's on 2 contracts. So that's about a $90. I'll just put here 90 max risk. So if I win the day, it'd be 250 minus 90. So $1.60 net profit on the day. If SPX is less than 59.40 at close. Okay. And honestly, I can set the take profit at $1, but I can also watch this go down. Let me see if I can get a little crazier here and go down to 50 cents. And go to 50 cents. Because since we're in the 0DT environment, we're getting to the very final minutes here. Let me go ahead and build this thing out. Now let's have some fun with this. Let's go SPX. That was the butterfly trade. Let me build out this trade. So close. I'm going to remove all this. Remove all this. Remove all this. All right. So I'm going to add in buy call, sell call, sell call, buy put, sell put, sell put. Let me build this trade out. So 59.40 call based on a 50 call. And that's a 40 and 45. So the buy call's there. And then so 40 call and a 50 call, 45 and 55. And then I'm selling the 58, 55 and the 58, 50 and a 45 and a 40. All right. So this is what the trade looks like today. coming into the final, 15 minutes. So here's now, okay, with about 346, so just coming into the final bits. If price just goes a little bit lower, then I can walk away with some profit here, right? So we'll see. IV on the day, it is around 26. So IV at 26%. Again, live price is what I'm focused on. Where do we go? We're trading at 29.51. So I'm showing a break even of around 59.50 today. It is possible that I don't lose anything at 59.50, but I'd obviously like to see it push just a little bit lower if possible. Okay. So, kind of an ideal win-win would be that we're back below 59.40. And I've got a chart I'm set right there. So for the next, 15 minutes, let's talk about some other stuff. Obviously, if price goes higher, then I'm taking on that risk. And, kind of max loss would be a little nasty today. But I've already embraced it. So, I'm already down about $1,000. It's the same it was like 3 hours ago. So I'm just going to hang out. Price would have to be greater than 59.55 for that max risk on the upside. But I'm still taking a win on the put side to let this thing cash settle. So either way, we'll see what happens. There's nothing I can do about it now other than close and eat the loss. So I'm just going to try to let this thing hopefully cooperate. I'd really be, happy to see this behave, because this was a really stupid way to open the market for the first 30 minutes of trading. Okay, question comes up from Lee. How would U.S. Moody's downgrade affect the dollar? Historically speaking, the downgrade usually has a stronger dollar. That's what we saw in the past. The last time this happened would have been, if you go, SPX back in 2011. I'm not exactly sure when the date was. I think it was August. Let's go to the monthly time frame. Let's go August of 2011. I know that was the downgrade. August 2011. There you go. So here's your vertical line there. So now let's go to a daily time frame. Heck, let's go to a weekly time frame. Okay, there's our August 2011. So what did the next couple of weeks look like? Well, we had one red candle. I'm thinking that it was like the 5th of August, I think, from what I read this weekend. 5th of August 2011 was the debt downgrade by the S&P. The market proceeded to drop quite a bit. That high to low was around 15%. We end up having a bit of a peak to trough from this recent high to this low is about a 22% correction. So, it's not nothing. But what did that do with the dollar? We'll take a look at the dollar back in August 2011, and you're probably going to see the dollar get stronger. Again, I don't think it's necessarily the same now. I think that the dollar positioning, I think that the global economy is in a very different place coming back into 2025. Here is August 2011. There you go. Here's August 2011. So right in this window here, dollar basically bottomed, and the dollar proceeded to get stronger. So from this low to high going into October, the dollar actually strengthened quite a bit for the rest of the year, right? That's a 12% appreciation of the dollar. Are we going to see something like that now? I don't know. I think that the dollar's in a very different place. What's the story with the Dixie? Yeah, I think at best, we're probably just dealing with a lot of noise. I think the dollar's still positioning for, if we have resistance here, we might have a bit of bouncing, higher lows and higher highs and just kind of grinding through this trend line. I think the real sellers are going to step in with either confirmation to push this thing to retest the lows, or this just comes down, grinds back up, grinds back up, grinds back up. This is where the bull trap would be set, and then the bears would take it back down. So overall, I'm still fairly bearish on the dollar. The only way I'm expressing that is by trading euro dollar long. That's it. I don't have any other dollar trades that I really like. I'm still long dollar Swiss just because of positive swap. But this is not the time to say I'm going to get crazy bearish on the dollar. This is a pretty terrible entry. So if I'm trading it here, I've got to be prepared to trade it into deeper pullback zones and then see if this actually revisits the lows. But I do think that the world has become like overly fixated on a weaker dollar. And, part of this, especially with some extremes, I'm a bit more, so just be careful on like heavy positioning on dollar shorts because I think there's still room to recover, to this like 102 to kind of 103 handle. But I'd say that the majority of the sellers are going to be sitting here back at some pretty heavy resistance around that 103 to 104 area. Okay. So that's euro dollar. Cuts, no cuts. I mean, the Fed's not going to do anything. The Fed's not touching anything until probably September. We go to the watch tool. I think I have it right here. Watch tool, current probabilities. This is actually increasing. So still pausing in June. July, which was expected to be a rate cut, pausing in July. This all could change, but the first rate cut would be likely coming now in September and again at the end of the year in December. There's a lot of time and a lot of data in between those cuts. So there's a lot of Trump talk in between those cuts. I mean, is the Fed going to have to step in and do something? Maybe. Um, I don't know because I think the Fed is watching a lot of things. The one good thing right now is that job numbers aren't getting worse. We have continued jobless claims that are stable, initial jobless claims that are stable. Non-farm numbers have been fine. I mean, I know the revisions have been terrible. It's like we had revisions that are way higher, way lower. Even on CPI and PPI, the revisions were way off. Doesn't really matter. Okay, people still have jobs. You can still get a job. You can keep a job. There's availability, so people are still working. Um, the whole recession talk, I think we'd have to have a much bigger wave of losses. We'd have to have a lot bigger wave of job losses for the market to then think, okay, Fed's mandate is price stability, liquidity, jobs, inflation, right? Inflation has been trending lower. Inflation has been stable. That's fine. Um, I mean, inflation is trickling higher. If you look at the 10-year yields, right? 10-year, 20-year yields are not going down to these Liberation Day levels, which means why would the Fed be cutting rates if yields are going higher, right? Because what would ultimately happen, let's say the Fed does cut rates. Let's say they cut by 50 basis points by the end of the year. There's no promises that this is going to be 50 basis points lower, okay? Because it wasn't the case in 2024 when the Fed cut by 100 basis points and the bond yields went up 100 basis points. So what could happen is the Fed could cut rates and they could service debt at a lower rate, but we as consumers would have to borrow at higher costs because if this goes higher, that is the bond market telling us that we are heading towards higher inflation. So unless there is a growth slowdown, I don't think that yields are going to change that much, right? So we will see. But I mean, unfortunately, that's the deal. Is there's a lot of wait and see. That's what's annoying. There's a lot of wait and see. There's a lot of wait and see on this, 90-day pause on tariffs. There's a wait and see with the final negotiations with U.S. and China. There's a final negotiation what's going to happen with Russia, Ukraine. There's a final negotiation what's going to happen with our trade allies. I mean, all we have right now is UK is in good faith inking a trade deal with the U.S. It's going to be it's one of the few countries that we operate in a surplus with anyway. They're still going to pay tariffs. China is going to pay tariffs. The whole world, the average tariff is 14%. If we send a Dear John letter that says, "Hey, here's what it takes to do business with the U.S." I mean, I think that if China is coming to the table right now, which they are, at least the talks have been happening, then I think it hopefully ushers in some some proactive measures by other countries to also step in and try to do some type of negotiation, at least while quote the getting is good. Because if you don't, it's like you get left behind because you're forced to pick a side. You're trying to. It's like I don't think anybody in the world wants to choose. Nobody wants to choose to be 100% into the US and nobody wants to choose to be 100% into China. It's like the global economy exists to be able to make whatever you want the cheapest possible, right? It's like the global economy for business purposes is to, outsource to make things cheaper to a consumer that can pay appropriate prices for it. Like we are the world's consumer, China's been the world's maker, and obviously the dynamics are shifting a little bit here and there, but I think ultimately like it's still that it's going to be different. We might buy less and try to export more. We might, who knows? I mean, China might make less and import more. I don't know, right? It's like it's all going to be some dynamic of how that plays out. So Anyway, if I'll say this, if the U.S. funds its own deficits, it doesn't have foreigners buy treasuries and keep the bond market greased, I think that's going to be an issue. So, again, this isn't like a doom and gloom ticking time bomb situation. I think markets are insanely resilient and they will ignore a lot of the crazy noise, and that's okay. I mean, that's what they're good at. Markets are good at ignoring noise. And I think now with Trump being a little bit quieter, the markets are certainly ignoring a lot of it because you look at what they've been doing for the last 3-4 weeks. This melt up is super aggressive, especially once we burst through this with the U.S. and China talks. I mean, doesn't seem like the market wants to stop, and doesn't seem like this downgrade from Moody's has anything to do with like, oh, the market's going to correct. Look, I'm just hoping that the market pulls back because I want a position for it. But if it doesn't, one of my services is just simple income swing trading where we're taking trades in here and in here and in here, and it's been paying us the whole way down. It paid us because we were protective and conservative, and the whole way up it's been paying us. So it's like we'll be fine. But it is annoying to see the market go from a 48.30 to a 59.70, and look at this market going up 100 or over 1,000 points. I mean, that's like $110 a share on the SPY. That's a lot of money you know, in the last month and a half, not even month and a half with that April. I mean, April 7th was our low, April 9th was our rip here, but that was it. And it just kind of feels like that was the only chance he had to participate was when everything was crazy uncertainty. So anyway, I hope there's a pullback. I really do. If there's not, fine. I don't care. I did this in the video yesterday. If you saw my post on Telegram, so anybody that wants to join my Telegram, it's free. My Discord, it's free. Here is my post that I did last night. I just posted this through TradingView. I can share this on YouTube. I put this on my Discord channels and Telegram. Here's what it says: 3 to 5, even 10% pullbacks, but I'm still maintaining a bullish outlook for the S&P. Okay, I kept it really simple. I'll even bring up the workspace here. Workspace here. I'll go blank and go to the monthly. Okay, if anybody's into some wave patterns, I mean, you can start from this low right here. You can still do wave structure, but this COVID low to this high in 2021, 2022, that swing right there, if this is we're basically in the middle of a fourth wave right now, potentially pushing higher to a fifth wave completion. If this is 1, 2, 3, that pullback was a wave 4. This bull market is still intact. This is a pretty conservative measurement for where the S&P can go. Not saying it has to be by the end of this year, but I'm saying that this at 6425 or 6400 is a pretty realistic target. So, I mean, it may take 6 months, it may take 12 months, but I think the market will continue to grind until that level is reached. If we have any type of bubble type levels will be, up into the high sixes, maybe even 7,000. But once we hit this level, I do expect an ABC correction to be pretty decent, at some point, but we'll find out. All right, I've got 1 minute for the close. I just want to spot check here. So 760 and 785. That's about my max risk on the day, unfortunately, which is kind of annoying, unless prices improve. But if we're above 59.50, above 59.55, I'm not really getting anything out of my call side, so I'm looking to take a max loss on that call side. And what a stupid freaking day for a little daily profit play that just, 1, 2, 3, 4, 5, 6, 7, 8 candles in a row bullish. So we had, 40 some minutes in a row to the upside. So it's kind of annoying, but it is what it is. We'll survive and trade again. Okay. You ever think I'll stay away from the market today and go play golf? Not really. Not really. I just like going to the range, honestly. I'd rather hit balls. I'm playing golf next weekend in Chicago. I play so infrequently. I don't really skip the days. There's other stuff I can do. I can prune the portfolio. I can manage other things. I can look at other trades. But there are definitely days where I'm like, what a wasted trade. Like today, I place a trade, follow the same process, rules that we win 90% of the time. What happened? I freaking lost. It happens. So that's what's frustrating. Telegram link, here you go. Telegram link is here. Telegram link is there. And I'm going to post a 30-minute link into my Discord. I just post that where it's a small window because I just don't want a bunch of scammers coming into my YouTube or my Discord channel. So here's where I pull it from. It's Chris Pulver Trading. First things first is I don't send friend requests. I'm not going to hit you up in direct messages. Everything is for all traders to talk to each other in an open public chat. If you want to reach my profile, it's here every single day. This is my profile. So Chris Pulver Trading, invite. I'm just going to show you this. So I'm only going for 30 minutes and new link, copy. So in the chat here, this will be Chris Pulver Trading. Chris Pulver Trading, Discord. There you go. Yep. Still have automated strategies in the background. Yeah, I mean, my robots are running at FOREX. They're fine. I mean, they're running on like 6 currency pairs. I spot check them every week. Yeah, they're fine. Yep. Okay. Yep, I'll get there, movie. Relax. Okay, so we good. So markets closed. Ended up taking a loss on this today, so I didn't get back down to my levels. This was my call side. This is my put side. I'm taking a loss today. So kiss my grits, SPX. But this was, pretty stupid. This was pretty stupid early in the day, and it just stayed there all morning and then continued to go higher. We did fill the gap. We actually notched out a slight gain on the day. So whatever, it's fine. Like I can sit here and be pissed about it. I mean, my portfolio is up on the day. It's fine. The whole tilt is bullish, so I'm still up 8 grand. I'm still sitting around high watermarks for the year, but annoying trade for me on the day. But my bad. It's like, and I didn't do anything wrong. I followed the same process I do every single day that wins us 9 out of 10 trades, and it just didn't work today. So it'll take me probably 5 trading days to grind it back. But once I do, I'll be back and get the money back, and I'll be break even or better. So just trade through it. Euro yen, here you go. What are you going to do on the euro yen? I look at this as nothing. Resistance, support down here. This structure is still holding. I'd say this is chop fest right now. If you're lucky, this thing sets up here with a chance to sell it. If you're looking for a high reward to risk, looking for sell confirmation to stay in this range. Obviously, if it clears these highs, then you're looking left on the chart for this type of breakout range. So I would be looking pretty much at a breakout only and trying to make sure you don't get faked out because there's a ton of choppy noise in here. So that's my euro yen for you. You're welcome. Okay. Anything else? Currency strength for the day. Aussie and New Zealand on top, euro on top, faded a little bit off the euro. The dollar was weak today, as was the Swiss and the CAD. Let's take a look at all those. So Aussie Swiss looking a little bit better. My Aussie Swiss is still long. I'm looking to target this cluster around 55.50. I will check that tick plays, right? I will take a look at it. I didn't get a chance to watch it this weekend. I was catching up on. I mean, I listened to like 8 different podcasts this weekend, but I've got yours in the mix. So I'm actually about to jump on the road in about 45 minutes, and I've got about 45 minutes on the road. So I'll give it a listen there at like 1.5 speed and see if I can put it together. And but yeah, I'm curious. I'm excited you sent that to me. Okay, Swiss pairs, CAD Swiss a little bit softer, Euro Swiss looking a little bit better, Pound Swiss a little bit better, New Zealand Swiss a little bit better. So just watching all these levels here, dollar Swiss is still potentially pullback. We're showing oversold conditions with divergence, but we might, I don't know, we can just kind of keep slowly grinding higher. Perhaps this level gets hit. That'd be my break even. Actually, I take that. My break even is about 86 on the US dollar. So we get back to 88. I'm probably going to safely take some profit. This trade I was in for a while. And when we hit 92 this year, I dumped about 30 positions long that had profit. So I got out of my dollar Swiss. I started to scale back in over here. So I started to buy more at equal lows, and I'm just kind of waiting. So my break even is right in the middle, trying to get back to like 87-ish, mainly just to get back to that pocket. Okay. And I've said this on the Swiss crosses. If we see gold get a little bit softer, okay, I'm still looking to see if gold can come back and find some of my moving averages. Gold was moving up on risk-off trading. Right now, we are not in a risk-off environment, right? It's not a risk-off environment. So I think that also tends to push gold down in a risk-on environment where it's not necessarily acting as a safe haven. Okay, and it's had a hell of a run anyway. So I just think technically, why am I bearish on gold? The same reason I was bearish in the S&P, the Nasdaq, the Dow, and a bunch of stocks this year, because of this high and this crazy bar count. We're 400 plus bars away. We stretched out, I think, over 20% away from the 200 moving average, which is pretty unprecedented. And yeah, we moved about 21% away from the 200. That's a big stretch. Now, I marked up here, I saw this capitulation back in 2009 and 2011, and we went over 600 bars and got 30% away from the 200 moving average. But my point is, 20% was something to say, hey, I think we might end up putting in a top sooner than later. Well, we did, and it's making lower highs right now. One thing that'd be kind of nice on gold for position traders would be something like this. If gold continues to make lower highs and lower lows, look, I'd love to see a drop below the 200 and then a close back above it. And I would like to get long on gold to go back to these highs. That'd be another, maybe an 8 to 10% gain, maybe more. Let's say we come down to the 200 moving average and we go back to all-time highs. That's a 23% move. I mean, I'd sign up for a trade like that if I can get it. Okay, silver, I still like silver a lot. If we pulled back to around 29 and we get back to the highs again, that's an 18, almost 19% move. We pull back to 26 on gold, get back to these recent highs, 32%. I still think silver has a heavy resistance zone around 35. If we break 35, this is one of my more favorite kind of metals trade because there's a lot of upside potential. Last time we had a high here was 2011 and 1980. But it's on my chart. So I think at some point, silver can get back to that level if the gold and silver ratio start to rebalance a little bit. Okay. All right. Anything else for today? Let me take a look at the heat map before we go. We had, what a stupid effing market today. We had 52% of stocks declining, 45.5% advancing. Like, what the hell drove the market up today? UNH recovery, it's like that's not a big enough stock. Mag 7 didn't go anywhere today. The fudge. Just, I don't know. That's silly price action to me. We don't have a broad market move at all. Over half the stocks were down today, but the index literally didn't even sniff a lower low. It gapped lower and just went instantly back to fill the gap. Like, that is a stupid trading day if you ask me. So whatever, man. I mean, just it is what it is. It's one day of trading. I just get mad when it's like this happens so infrequently that I get mad when it happens because this is a win, this is a win, this is a win, this is a win. All these other days are easy wins, and so like eight candles in a row, 40 straight minutes of nothing but bullishness, and you went like 3 times the expected move. Thanks. So that's what makes me mad. It's like we went up as high as 7. I mean, that's a two standard deviation move from the market maker's expected move today. It was a plus or minus 30 points and went up 71. So there you go. Expected move was not greater than the actual, which is kind of crappy. So anyway, it is what it is. Tomorrow's a new day. We'll grind through it. That's all you can do. All right. So tomorrow's a new day. Delete some alerts and off we go. Okay. I'm still looking at a gap fill. It's just when does this happen? I don't know. Does it happen? Probably. It's just when. Is it at all-time highs? Hopefully not. I mean, give me something to participate in, Go back to the 1 hour chart here. We're within about 3% of the all-time highs. So my question is, are we going to melt up to the all-time highs before we have a correction? I would rather see a pullback first. Obviously, I've been talking about that for the last couple of weeks. I thought this was a little resistance. If the bulls can just keep this market above, let's say 5,800, man, it's like there's not much that the bears are going to do. If they stay here and we spend more time, it's like the higher probabilities we just stay higher. We might still come back and use this gap as support, but it's probably going to be a buy the dip opportunity. Okay. Post-Brexit UK Eurozone. I mean, again, I'm not grasping at straws to say why. It's like it just doesn't matter. It's like if it mattered, then I would have won today. It's like it doesn't matter because I followed the rules. I still have defined risk. It is what it is. I don't win every trade, but it's annoying when I see how many days can you win? You can win here, 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 and then you can lose here. Okay, well you can win here, you can win here. It's like it's just annoying. It doesn't happen very often, so obviously when it does happen, I don't like it. But most of the time we win. So I put together a nice little 4 or 5 day streak, and we'll be back on top, and no big deal. So that's the day. All right. What else? Cocoa. I can't trade cocoa futures, but if I did, I'd be looking to short it. Let me go. Actually, let's go to this chart here for cocoa futures. So CC. Yep. Yeah. I mean, I looked at cocoa futures like this. Either this is horizontal resistance, or we have a slight channel here. And I would say, don't call the top, but I think with option trading, if cocoa futures came into 12,000 or even up to 13 and change, I'd be looking for a selling opportunity. So I'm not that interested in trading this thing long, but I would say if it comes to me, I'm not going to trade it because Tasty doesn't have cocoa futures in their platform. But I really would love to sell this thing like at that 13,000 mark. Defined risk option trade, so bear, like an asymmetric bear put spread would be really nice. Something where I can, risk $100 to make $150 to $200, level up the contract, something I'm comfortable with risk wise, and I think that'd be a good trade. So if you're long cocoa futures, then okay, then you're trading smaller time frames and you're trying to get in and grind this thing to, maybe that channel high or respect that 13,000 mark. Yen pairs, I don't know why you want to trade the yen. Dollar yen, it's going to be slippery. As long as the dollar yen doesn't do any damage below this level, it's probably a pullback, settling back in, maybe some higher lows, works its way back up again. I wouldn't be terribly shocked to see this level hold, and there's your dollar yen hold and bottom, and getting back up into this cluster of garbage and resistance up here and resistance up here. Damage could be done, but if we break the lows, it's like we're going to see risk off trading if we break the lows. If we break the lows on dollar yen, we break the lows on Aussie yen, euro yen, Swiss yen, pound yen, then we're in a risk off environment. Like that'd be the safe haven flow. So I think it's probably pretty important if we want to see equities maintain these rallies that we need to see the Japanese yen be a little bit more resilient and softer. Okay, so that's the yen. And and the best spot to buy this was when I talked about the lows. I said, look, if you've got if it doesn't do too much damage below the 140 handle, there's an opportunity to get long, and you had 800 pips. That was great. I mean, I certainly didn't have to take all that profit, but even getting started at that, I mean, what better support could you have than equal lows? It was actually trickier to trade, Aussie yen and New Zealand yen because they breached the lows by 300 or 400 pips, but then they also ripped like 800 pips. So your long dollar yen and short, is that Swiss yen? Yeah, Swiss yen would be my least favorite. You asked me this last week, and I don't know. I mean, it's safe haven versus safe haven. I don't know why. I don't know why I'd want to position for this one outside of if the Swiss is going to get softer, then yes, this should go down. But it's also a negative carry trade. Your long dollar yen, which is positive carry, which is fine. I just think the dollar is still going to get kicked in the face a little bit. So just yen pairs are. It's hard to talk me into really loving a yen pair right now. Outside of those August 5th bottoms last year that provided some really nice support. I mean, the same thing happened here, right? Support buy the lows. That's a great buy trade. Dollar yen, same thing. Euro yen, same thing. Okay, pound yen never hit the lows. Aussie yen breached the lows. New Zealand yen breached the lows. CAD yen used the lows. So I mean, you had the CAD yen. Let me just type this out. So you had CAD yen was really good support. Swiss yen was really good support. Dollar yen was really good support. Aussie yen ended up going long, but it was a breach, right? New Zealand yen was a breach. The euro yen didn't align because it was behaving with the dollar movement. So the euro dollar went crazy, the euro went crazy, the euro yen went way up before everything else. So it didn't align. The pound yen never revisited the August 5th bottom. Did I leave any out? No, that's 7, right? So that's every yen pair. 2 were difficult. 1 didn't even align. The other one didn't even hit the bottom, which I guess technically didn't align either. You had 3 of the 7 that were really good trades, and now they're done. But yeah, swaps are brutal. If you're paying double and triple swap, it just sucks. Like honestly, 2022, I felt it a long time. I was like trying to play the yen for like 6 to 8 months, and I was long in a couple as a hedge, but I was short Swiss yen and dollar yen, and they drove me crazy for almost 8 months. Plus, I paid an arm and a leg for swap. So yeah, it wasn't great. But anyway, that's where I'm at. It's hard to convince me to take a bunch of yen traders because I don't like them. I think what the yen ends up doing is you end up sitting around for these great alignments, and you might get an opportunity to see an aggressive rally when it's all lining up like perfectly. But if you're holding them, it's like you can just sit and get paper cuts with swap to death, and it's like even though the market does go your way, it's annoying to take that swap out of it. Right? You make $1,000, you pay $100+ in swap, and I mean, it's still win, but it's like it just for what? Just holding my position. I mean, could you imagine buying a stock and getting charged every day to buy a stock and hold it? You buy an option contract or you sell premium, and you get charged every day that you're holding a trade. It's like that's asinine, but that's what forex is. There are swaps, and it's good and bad. So anyway, just be careful. That's all I'm saying. Yens can be extremely slippery. They have good alignments, but the best trades I've made in the yen pairs is when everything aligns. When all baskets align with like the whole yen basket is like, okay, look, every yen pair looks ready to rip, every yen pair looks ready to fall. That's a good looking yen trade to me. That's kind of where I'm more convinced I'm willing to take the trade. But if they're all fragmented and they're all in different places, it's tough to say like this yen looks good versus this yen. It's mostly a basket driven currency. They all kind of do the same thing. So, and the Swiss yen, just because of safe haven, I think this is a tough one. We talked about it last week. If it's here, I mean, if this just grinds and grinds and grinds and grinds and grinds, like maybe that structure breaks and it goes back down. But does it take months of holding and negative swap to get that trade? That's a good trade, but it might also go all the way up here again, pop the highs, and then come back down, and then take its time, like it did there. So it's just so hard to tell, you know. But hopefully you're trading small enough and it's not too bad. So all right, let me see here. Schedule wise for tomorrow, I don't have a webinar pushing. Well, it might be just a little bit. No, maybe not. I should be good for tomorrow. Wednesday, I might actually be out of the office, so I'll try to post a video for the 3 o'clock walkthrough or 3 o'clock final hour. I'm going to be on the road, and I've got an afternoon obligation that I'm probably just going to post a video for my 3 p.m. on Wednesday. Thursday should be fine. Friday should be fine. So yeah, we just had a webinar scheduled at 2:30 today, which pushed into my 3:30. So it is what it is. Okay, here we go. All right. Last look. Currency strength on the day. Surprised to see the heat map was kind of garbage. I mean, 51% of stocks down, 44% of stocks up, kind of a mixed bag. Tesla pulled back a little bit. Mag 7 was kind of flat on the entire day. S&P somehow still managed to get all the way back to scratch. So here's your S&P for the day. I mean, just right out of the gate, just rip. So, whatever. Call it price manipulation, call it whatever it is. It's just my trade didn't work out. No big deal. I don't know. Did anybody see this type of crazy price action on SPY today? Was anybody watching the SPY this closely? I had this on my dynamic trends chart, and I was like, oh, that's a data glitch. But it's on TradingView too, and usually their data integrity is pretty darn good. If anybody's watching the SPY today, we have some silly price action like this, or we just have like an outage. That's obviously you look left. It's like you're not going to see that type of wild price action. So what the heck happened? Just weird. So, anywho, Yeah, I was just curious what that was. That just seems like a lot of noise and maybe some weird stuff. Equal weighted futures market, again, like right out of the gates, just all the way up on the day. Here's my futures trade here. So for the VWAP this morning, it was opening up right around the session VWAP and ended up going higher. Why do I have these together? These should be two different VWAPs. Week and session. Okay. Oh, first trade of the week. All right. So anyway, we started above the VWAP and stayed there all day. Continued to persist higher until we hit the kind of the second band. So yeah, pretty good trade on the day. That would have been a nice way to hedge as well as just be long futures. But yeah, that's the hard part is if I traded every day with like the intention of like I'm going to get into a daily profit play and hedge it, I'm going to end up making $0 most days because like my hedge might pay, but or maybe I lose on a hedge because the market goes nowhere. It's tough. You eventually got to make a decision to like ride a winner, but it's so hard to like truly know full direction for a 0-day environment. Equities markets closed mixed after Moody's lowers U.S. ratings. Yeah, we freaking know. So who knows what the rest of the week looks like? We'll see. Maybe the market props itself up for a decline the rest of the week. There's no major news out of the U.S. This week is a pretty light calendar for the U.S. So I don't know. But maybe a little bit of chop suey like we had here would be kind of nice. I'd love to see some chop. That'd be great, actually. But we'll find out. Okay. I'll let you go. Come back and do it again tomorrow. All right. Thanks, everybody. Telegram, like I said, Telegram service is free. Discord is free. The links are posted. And if you'd like to join, cool. Services continue to grind. They posted a sweet little AI picture of me for whatever reason. It's like, yeah, this guy likes to look like a guy that wants to fly an airplane. I guess that's my AI gen model. Anyway, fun with marketing. But I post videos, I post analogs, I post data, I post whatever I read newsletter wise. I post that in Discord and in Telegram. At the end of this month, I am really excited. I have a custom scanner that I've been working on for about 4 months, and it's taking about 700 of my favorite instruments that I watch and giving me some actionable trade ideas. A couple ones that I'll put on your radar right now would be GLD and SLV. So I think that gold and silver in the next like 30 to 60 days are primed to make some moves. I'm going to try to position accordingly. I think we've got some good directions ahead. So cool stuff. But that'll be coming. You'll see some more stuff pop up in the Telegram and Discords about that. And that's a dashboard that give member access to. It's how I find trades. How I manage a lot of these trades. Some of my discretionary services that I run, I use that trade idea generator. So I finally got it all working and added a bunch of cool stuff to it. And it's really easy to follow. I'm trying to make it very simple, literally like a ready, set, go, and then up or down. And if we can do that, we can find some great trades. So that'll make things a little bit easier. And should be coming up in the next week or so. Okay, that being said, have a good rest of the day. I will see you back here tomorrow for the final hour. Thanks for being here today, everybody. If you are not subscribed to the channel, you know what to do. Like and subscribe. Certainly helps. Get the old thumbnail updated in the algorithm. Get some comments and stuff in the live sessions. And get old YouTube to support the channel. Okay, see you mañana. Thanks, everybody. Bye.